Oh, the most important thing you can ever possibly do, and this is a fundamental life lesson, is that never stop learning. When you leave this university, your education doesn't stop because you walked out these doors. And when you apply this to technical analysis, you're going to find that you're going to actually change the system, because you're learning. Well, the best example is because I'm explaining to you essentially how this stuff works, and maybe some of you will actually go out there and learn more about this. You're going to have a direct impact on what is actually posted or what is actually printed, and because you're having an impact on that system, you're going to change those patterns that you just learned about. So you're going to have to be insightful, and you're going to have to look for new things that will develop. You really should open up an account. You really should do this for yourself. You really, the reason being is because the whole purpose behind this club is that you have to take your future into your own hands. If you don't, Social Security isn't going to be around, and you're going to be choosing between dog food and prescription drugs.
Preferably go with Scottrade.
Yes, preferably go with Scottrade if you're going to focus on trying to materialize real dollars. And oh, here's the other thing. Is my father's going to come out in 2008. By that time, you guys should be well versed in this stuff, you know, doing your own thing. Dan suggested, actually I thought this was a good idea, is doing Fourier analysis and incorporating that into a model. Hey, go for it. I mean, again, this takes it from the... I mean, this is what we're talking about. This is why this is starting to edge from that art form to a science.
To be able to evaluate so many things at once, it's very confusing. One of the things I learned in that experience was that these particular charts on the candlesticks can be very helpful to identify breakouts, and also to possibly develop some intuition for where you are relative to where the market's moving. But one of the things I find here is that when you show these, it's somewhat misleading because of the coloration. In fact, what you see basically are two colors. You see a green-red in these, and you see a flame up here from the candle. And the thought is that when the market's moving sideways, you can sort of picture these things really condensed and close together to one another. The coloration is very important. It's part of the visuals, some of the cues that you take in. So they'll play with the colors to identify, certain issues. And you could scan these very quickly because you have two screens and they're moving at all times. It's all real-time data that's being poured through the system. So, you're sort of sitting there, you're sort of trying to take all this in and use and everything like that. And they'd let us trade around noon or so. So the market's kind of quiet about noon. We always say here, when we were saying selling and buying pressures and things like that, a lot of people say the old story on the street is volume pushes price. It's volume that moves the price. So if you get a lot of volume, it's usually in the early hours, it's in the closing hours. You tend to see that in just about every type of market, every type of financial market. A lot of volume is what moves the pricing in these places. So when you get into noon, a lot of the traders leave the floor. They don't want to mess with it because that's the most risky time to be trading. Why is that? Because that's when the market's moving sideways. And so you look at the candle, and a lot of people say, if you're in a position, you're taking a lot of heat. So this professional trader was giving us a seminar. Excellent, excellent speaker. And he'd tell us, you're going to be taking a lot of heat this time. You're going to put your hand over the candle. You don't know where the market's going to go. You're just sort of seeing it move sideways. And the candlesticks is a very interesting approach to this idea, because of the length of the wick, because of the coloration you see between red and green, because of the story it tells. It's kind of interesting. But it seemed to me, at least this was my impression from all that experience, that when you look at these kinds of charts, they make sense to a day trader. They don't make sense to many other folks. But if you're dealing in a day trading environment and you're looking at this news, that news, and you're factoring a lot of things in at once, you're trying to come up with some understanding of what is mispriced, what is not mispriced. And you have to think about bonds, you have to think about gold, and you have to think about oil from the perspective of where money moves. Is it moving out of one commodity, it's going to move into another. There's always an arbitrage. So one of the laws issues that you mentioned about supply and demand, one of the laws there is arbitrage. And it's an old story, of course, buy cheap, sell dear. We always argue that anytime there's an arbitrage opportunity, if I can buy IBM for 100 in New York and sell it for 150 in Tokyo, I'm going to be buying and selling this situation until those opportunities are fully exploited. Now, we don't tend to see opportunities like those because, in general, there are no arbitrage opportunities left for us to exploit. That doesn't mean they never existed. They did exist, but when you're competing against guys that have 3 screens, deep pockets, and they're wired into the floor of the exchange, and they've got 3 trading degrees, they're hot. They've been doing this. Good luck. It seems like practically an impossibility. The only thing you can bank on are some laws. And consider whether or not the pricing is wrong. If it's deepening and becoming more and more mispriced. And if you think it is, and you have good reasons to think that, because of the arbitrage opportunities that should exist, and you believe that they're there, you're going to have to take heat for a while before you can actually pan that gold. And that's what you were doing earlier. You're sweating, right?
Of course.
In the nomenclature, you were taking heat. And if you really feel that the herd behavior is pulling the price down into the ground, and you have feelings that the fundamentals, the multiples on the earnings and so forth, call for a higher value, and you're willing to bet this because you have feelings of the fundamental, you think that the asset's fundamentally mispriced, how long will it be before you actually realize the 30% there? It's easy for us to look at this and say, damn, that was nice, damn, this 20. But the fact is that we're moving sideways, or it's moving against us. And that's the hardest thing that a trader goes through. Those aren't my words. I'm just repeating what I was told by a very good professional trader. An individual had been trading. He told me the only time I trade now is when they move me to Japan to make a particular trade. And he'll structure the trade, he'll study that trade for a week or so, and he'll write up a contract with the client and say, this is how I propose to execute this transaction on your behalf.
Really just one trade? It's
Yeah.
kind of hitman sort of stuff.
You've got 6 zeros on the end of that trade. But in the same process, you've got to be considering what it means. And so dealing in the small stuff, I perfectly understand your situation. I'm right next to you. I work for the government too. But, so I know what you mean. Those are some observations that I got from my experience with the candlestick thing. I think they're really interesting, and I would recommend everyone have a look. Have a look at this thing. It's really kind of a really useful tool, but you have to interpret it in the context in which it seems most applicable. And it seems to me, now I might be wrong. This is my own perception. It seems to me it's a very short-term day trader instrument.
I don't think anybody would argue against that.
Those are just some observations from Chicago.
Very good.
Eric, thank you very much. I never sweated through this.
All right.
6. Alan, nice.
How long was it?
About 56 minutes.
Hey. Nice.